The middle class is being destroyed, and most people don't even realize it's happening. I'm Robert Kiyosaki, author of Rich Dad, Poor Dad, and I've been warning about this for 25 years. But what's happening right now is different. This isn't just another economic cycle. This isn't just inflation or a recession. The entire financial system that your parents and grandparents trusted, the system that promised you a secure retirement if you worked hard and saved money, that system is collapsing. And if you don't understand what's really going on, you're going to lose everything. The course of history has just changed, and I'm going to show you exactly what that means for your money, your family, and your future. Let me start with something that should terrify you. The US dollar has lost 97% of its purchasing power since 1913, when the Federal Reserve was created. Think about that. 97%. What cost $1 in 1913 costs? Over $30 today. Your grandparents could buy a car for $500. Today, the average new car costs over $45,000. But here's what's really scary. Most of that currency destruction has happened in just the last 20 years. The pace of dollar devaluation is accelerating, and it's about to get much, much worse. Because the course of history just changed in a way that most people completely missed. In August of 2023, something historic happened that barely made the news.
The BRICS nations, that's Brazil, Russia, India, China, and South Africa, announced they were working on a new currency to challenge the US dollar's dominance in global trade.
Then in January of this year, they expanded to include Saudi Arabia, the United Arab Emirates, Egypt, Ethiopia, and Iran. Now, let me explain why this is such a big deal. Since the end of World War II, the US dollar has been the world's reserve currency. What does that mean? It means that when countries trade with each other, they use dollars. When they buy oil, they use dollars. When they store their wealth, they hold dollars. This has given America an enormous advantage. We can print as much money as we want, and the rest of the world has to accept it because they need dollars to trade. But now, the BRICS nations represent about 45% of the world's population and over 30% of global GDP, and they're saying they don't want to use dollars anymore. They're creating their own currency, backed by gold and commodities. When that happens, when the world stops using dollars for trade, the demand for dollars will collapse. And when demand collapses, the value collapses. This is the end of an era. This is the end of American financial dominance. And most Americans have no idea it's even happening. They're going to wake up one day and find that their dollars can't buy what they used to buy, their savings have been wiped out, their retirement plans are worthless. And they're going to ask, how did this happen? Why didn't anyone warn us? Well, I'm warning you right now. The financial system you've been taught to trust is failing. And you need to get your money out of dollars and into real assets before it's too late. Now, let me tell you about my two dads, because this is where I learned the difference between good financial advice and terrible financial advice. My poor dad was the head of education for the state of Hawaii. He had a PhD. He was smart, well-educated, respected, and he was broke. He believed in getting a good education, getting a good job, working hard, saving money, buying a house, and investing in a retirement plan. He did everything he was supposed to do. And he died with almost nothing. My rich dad never finished 8th grade. But he understood money. He understood how the financial system really works. He understood the difference between assets and liabilities. He understood that the rich don't work for money. They make money work for them. He understood that savers are losers and debtors are winners in a system designed to destroy the value of currency. And he became one of the wealthiest men in Hawaii. The difference between these two men wasn't intelligence or education or work ethic. It was financial education. My poor dad had none. My rich dad had mastered it. And that's the difference between ending up rich or poor in America. Here's what my rich dad taught me that changed my life. The rich don't work for money. The poor and middle class work for money. The rich acquire assets. The poor and middle class acquire liabilities they think are assets. And that one distinction, understanding what is truly an asset versus what is actually a liability, that's what determines whether you end up rich or poor. Let me give you the simple definition. An asset puts money in your pocket. A liability takes money out of your pocket. That's it. It doesn't matter what your accountant says or what your financial advisor says. If it puts money in your pocket, it's an asset. If it takes money out of your pocket, it's a liability. So let's apply this to the biggest purchase most people make, your house. Is your house an asset or a liability? Most people say it's an asset. After all, it's probably worth hundreds of thousands of dollars. Your accountant lists it as an asset on your balance sheet. Your bank approved you for a mortgage based on it being an asset. But according to my definition, your house is a liability. Why? Because every month it takes money out of your pocket. You pay the mortgage, the property taxes, the insurance, the maintenance, the repairs. Money flows out of your pocket every single month. That's a liability, not an asset. Now, if you rent that house out and the rental income exceeds all those expenses, then it becomes an asset because now money is flowing into your pocket. Same physical property, but the cash flow direction determines whether it's an asset or liability. This is why the middle class never gets ahead. They acquire liabilities thinking they're assets. They buy a bigger house, a new car, furniture, electronics, all things that take money out of their pocket every month. Meanwhile, the rich are acquiring real assets. Rental properties that generate cash flow, businesses that generate cash flow, stocks that pay dividends, commodities like gold and silver that protect against currency devaluation, things that put money in their pocket. And here's the really insidious part. The entire system is designed to keep you in the middle class. The education system doesn't teach financial literacy.
It teaches you to be a good employee. The government tax system punishes employees and rewards business owners and investors. The banking system is designed to keep you in debt.
The financial services industry sells you mutual funds and retirement plans that benefit them more than you. It's all designed to transfer wealth from the poor and middle class to the rich. And unless you understand how the game is really played, you're going to lose. You're going to spend your entire life working for money, paying taxes, and dying broke, just like my poor dad. Now, let me talk about debt, because this is where most people get confused. They've been taught that debt is bad. You should avoid debt. You should pay off your credit cards. You should pay off your mortgage as fast as possible. You should live debt-free. This is terrible advice. This is poor dad advice, and it's going to keep you poor. Rich dad taught me that debt comes in two forms, bad debt and good debt. Bad debt is debt you use to buy liabilities.
Credit card debt to buy clothes and vacations. Car loans to buy depreciating assets. Student loans that don't lead to higher income. This kind of debt makes you poor.
But good debt is debt you use to acquire assets. Mortgages on rental properties where the tenant pays the debt. Business loans that allow you to grow a profitable business. Any debt where someone else or the asset itself pays the debt service. This kind of debt makes you richer. And here's the key insight. In an inflationary environment, when the currency is being devalued, debt is your friend. Why? Because you borrow today's dollars, which are worth more, and you pay back tomorrow's dollars, which are worth less. Inflation erodes the real value of your debt. This is what the government does. They borrow trillions of dollars and never intend to pay it back. They just inflate the currency, which makes the debt worth less in real terms, and the rich do the same thing. They use debt to acquire assets, and inflation makes both the assets more valuable and the debt easier to pay off. But the middle class does the opposite. They save money in the bank, which inflation destroys. They pay off their mortgage, which means they're using today's expensive dollars to pay off old cheap debt. They avoid leverage, which means they can't acquire as many assets. Everything they do makes them poor in an inflationary environment. This is why I say savers are losers. Not because saving is bad in principle, but because in a system designed to destroy the value of currency, cash savings make you poorer every year. The purchasing power of your savings is constantly declining. You might think you're being responsible by keeping money in the bank, but you're actually guaranteeing that you'll be poorer in the future. Let me give you a concrete example. Let's say you had $10,000 in the bank in 2020. You were being responsible. You had an emergency fund. You were saving for the future. Fast forward to today, and that $10,000 is still $10,000 in nominal terms, but its purchasing power has dropped by about 25% because of inflation. So in real terms, you now have the equivalent of $7,500. You lost $2,500 by being a saver. Meanwhile, someone who took that $10,000 and bought Bitcoin or gold or rental property or really any asset, they're way ahead because assets appreciate when currency is being debased. The nominal price goes up even if the real value stays the same. This is why the rich keep getting richer while the middle class keeps getting poorer. They understand that cash is trash and assets are king. Now, let me talk about the biggest scam in American finance, the 401k. This is something I've been ranting about for years, and people think I'm crazy. But I'm going to explain to you exactly why your retirement plan is a trap designed to make Wall Street rich and leave you broke. First, understand where the 401k came from. It was created in 1978 as a corporate tax loophole. Companies figured out they could stop funding defined benefit pensions, which guaranteed retirees a specific income for life, and instead shift to defined contribution plans, where employees contribute their own money and take all the risk. This was great for corporations. They saved billions by eliminating pension obligations. But it was terrible for workers because now you're responsible for funding your own retirement. You take all the investment risk and you have no guarantee of income when you retire, but it gets worse. With a 401k, your money is locked up until you're 59 and a half years old. If you take it out early, you pay massive penalties and taxes. So your money is trapped. You can't use it to invest in real estate or start a business or take advantage of opportunities. It just sits there in mutual funds managed by Wall Street, earning them fees while you take all the risk. And here's the real kicker. When you finally retire and start taking distributions, you pay income tax on all of it. At what tax rate? Whatever the government decides. They might raise taxes to 50% or 60% by the time you retire. You have no idea what the tax rate will be. So you've deferred taxes into an unknown future tax rate, which is probably going to be much higher than today's rate. Compare this to how the rich handle retirement. They don't have 401ks. They have assets that generate cash flow. Rental properties, businesses, royalties, dividends. They control those assets. They can access that cash flow anytime. They pay lower capital gains tax rates instead of ordinary income rates. And they can pass those assets to their kids, who inherit them at stepped-up basis, avoiding taxes altogether. The 401k was designed to benefit Wall Street and corporations, not you. And the fact that financial advisors push it so hard should tell you something. They make money from managing your 401k. They have no incentive to teach you how to invest in real assets that you control. This is financial slavery. You work for 40 years putting money into a retirement account. You can't access taking all the investment risk and hoping there's something left when you retire. Meanwhile, the rich are building cash-flowing asset portfolios that make them money whether they work or not. Now, let me talk about what's happening right now in the economy that everyone needs to understand. We're not in a normal economic cycle. We're in the end game of a 70-year debt supercycle that began after World War II. Here's what happened. In 1944, the Bretton Woods Agreement made the dollar the world's reserve currency, backed by gold at $35 per ounce. This gave America enormous power. We could print dollars, and the world had to accept them because they could always convert them to gold. But in 1971, President Nixon ended the gold standard. Why? Because we had printed so many dollars to fund the Vietnam War and social programs that foreign governments were demanding gold for their dollars, and we were running out of gold. So Nixon just said no more gold backing. The dollar became pure fiat currency, backed by nothing except faith in the U.S. government. Since then, the money supply has exploded. We've gone from printing billions to printing trillions. Every financial crisis, every recession, the solution is always the same. Print more money. Bail out the banks, bail out the corporations, stimulate the economy with fake money. And this worked for a while because the dollar was still the world's reserve currency. We could export our inflation to the rest of the world. But now, as I mentioned earlier, that's ending. The BRICS nations are creating an alternative. The dollar's dominance is being challenged. And when that ends, all that inflation we've been exporting is going to come home. This is what I mean when I say the course of history has changed. We're at the end of the dollar's reign as reserve currency. We're at the end of America's ability to print unlimited money without consequences. We're entering a new era where the bill for 70 years of financial excess is coming due. And most Americans are completely unprepared. They have their wealth in dollars. Their savings are in dollars. Their retirement accounts are in dollar-denominated assets. When the dollar loses its reserve status, when foreign governments start dumping their dollar holdings, when confidence in the currency collapses, all that wealth is going to evaporate. This is why I've been screaming about gold and silver for 20 years. This is why I've been telling people to get out of paper assets and into real assets. This is why I've been warning that the biggest crash in history is coming, because I can see what's happening. I understand the game, and the game is ending. Let me tell you what I'm doing with my money. I'm not in stocks, I'm not in bonds, I'm not in mutual funds, I'm not in retirement accounts. I'm in what I call the 3 Gs: gold, silver, and God. But let me explain what I really mean by that. Gold and silver are real money. They've been money for 5,000 years. Every fiat currency in history has eventually gone to zero. But gold and silver always maintain their value because they're scarce, they're portable, they're divisible, and they can't be printed by governments. When the dollar collapses, gold and silver will still have value. But I'm also in real estate, not my personal residence, which is a liability, but rental properties that generate cash flow. Properties where the tenant pays all the expenses and I keep the profit. Properties that appreciate when currency is debased. Properties that give me tax advantages because the government wants to encourage real estate investment. I'm in oil and gas investments. Energy is always valuable. As the world economy grows, energy demand grows. And oil and gas investments come with enormous tax benefits. I can deduct exploration costs, drilling costs, depletion allowances. The tax code is designed to make energy investors rich. I'm in businesses. I own multiple companies. Businesses generate cash flow. They create jobs. They solve problems. And they benefit from tax advantages because the government wants to encourage business creation. As a business owner, I pay far less in taxes than I would as an employee earning the same income. Everything I invest in has 3 characteristics. It generates cash flow, it appreciates when currency is debased, and it comes with tax advantages. This is how the rich think. They're not trying to save dollars. They're trying to acquire assets that generate cash flow and protect against currency devaluation. Compare this to what the middle class does. They save dollars, which lose value. They invest in 401ks, which trap their money and leave them vulnerable to stock market crashes. They buy houses they live in, which are liabilities. They work as employees, which is the highest tax form of income. Everything they do makes them poor in the long run. This is not an accident. The system is designed this way. The education system doesn't teach financial literacy because they want you to be an employee.
The tax system punishes employees and rewards investors and business owners. The financial system pushes products like 401ks and mutual funds that benefit Wall Street more than you.
If you want to get rich, you have to understand the game and play by different rules than the middle class. You have to acquire financial education. You have to build assets. You have to use debt strategically. You have to minimize taxes legally. You have to think like the rich, not like the middle class. Now, let me address something that people always ask me. Isn't gold and silver old-fashioned? Shouldn't I invest in cryptocurrency instead? After all, Bitcoin is digital gold, right? Look, I own Bitcoin. I think cryptocurrency has a role in a diversified portfolio. But understand what Bitcoin is and what it isn't. Bitcoin is a speculative asset. It might go up, it might go down. It's extremely volatile. And it's only 12 years old. We don't know if it will exist in 50 years. Gold has been money for 5,000 years. Every civilization, every empire, every culture, they all valued gold. When Rome fell, gold still had value. When the British Empire declined, gold still had value. When currencies collapsed, gold still has value. It's the ultimate store of wealth across time and geography. So yes, I own some Bitcoin, but the core of my precious metals holdings is gold and silver. Physical gold and silver that I can hold in my hand. Not paper gold, not gold ETFs, not gold certificates, physical metal stored securely. Because when the system collapses, paper claims on gold might be worthless. But physical gold will always have value. And understand why gold is valuable. It's not because it's shiny or pretty. It's because it's rare, it can't be printed, and it takes real resources to mine it. There's only about 200,000 tons of gold ever mined in human history. All of it would fit in a cube about 68 feet on each side. It's scarce, and that scarcity gives it value. Compare that to dollars, which the Federal Reserve creates with a keystroke. They added $6 trillion to the money supply in 2020 alone. $6 trillion created out of thin air. And people wonder why inflation is running wild. When you increase the supply of anything by 40% in 1 year, its value has to decrease. That's just basic economics. This is why the rich hold gold. Not to get rich. Gold doesn't make you rich, but it protects your wealth from currency debasement. If you had $10,000 in gold in 2020 and $10,000 in cash, the gold would be worth more today because it maintained its purchasing power while the dollar lost 25% of its value. Let me talk about something else that's crucial to understand. The difference between financial intelligence and financial education. Most people think if they read some books or take some classes about money, they'll be financially educated, but that's not enough. Financial intelligence is about taking action, making mistakes, learning from experience, and getting better over time. I learned more from my failures than my successes. My first business went bankrupt. I lost everything. I was living in my car for a while. But that failure taught me lessons about cash flow management, about partnerships, about due diligence that I never would have learned from a book. The middle class is paralyzed by fear of failure. They want guaranteed success. They want a steady paycheck, job security, a safe retirement. But that quest for security is what keeps them poor, because there's no growth without risk. There's no wealth creation without taking chances. The rich understand that failure is part of the process. You try things, some work, some don't. You learn from the failures and get better. This is how you develop real financial intelligence. Not by reading books, but by getting in the game, taking risks, making mistakes, and improving. This is why I tell people to start small. Don't quit your job tomorrow and try to become a real estate mogul. Start with a small rental property. See if you can make it cash flow. Learn about tenants, repairs, property management. Make mistakes on a small scale where they won't destroy you, then gradually scale up as you get more experienced. The same with business. Start a side business while you still have your job. Test your idea. See if customers will pay for it. Learn about marketing, sales, operations, finance. Build it up slowly. And when it's generating enough cash flow, then you can quit your job and focus on it full time. This is how wealth is actually built. Not by getting lucky or hitting a home run, but by starting small, learning the game, making mistakes, improving, and gradually scaling up. It's boring. It's not sexy, but it works. Now, let me tell you what I think is going to happen over the next 5 to 10 years. I believe we're entering the greatest wealth transfer in human history. Wealth is going to shift from the middle class to the rich on a scale we've never seen before. And it's going to happen because most people don't understand what's coming. Here's a sequence of events as I see it. First, the dollar is going to lose its reserve currency status. This won't happen overnight. It will be gradual as more countries start trading in other currencies or the new BRICS currency. But the trend is clear and irreversible. As demand for dollars decreases, inflation is going to accelerate. Not the 5 or 6% inflation we've seen recently, but real hyperinflation. 10%, 20%, maybe higher. The government will print even more money to pay its debts and fund its programs, which will accelerate the currency collapse. Asset prices are going to explode in nominal terms. Real estate, stocks, gold, silver, commodities, anything real will shoot up in price. Not because they're more valuable in real terms, but because dollars are becoming worthless. This is what happened in Weimar Germany, Zimbabwe, Venezuela. Asset prices go parabolic during hyperinflation. But here's the key. Only people who own assets will benefit. If your wealth is in cash or fixed income investments like bonds or CDs, you'll be wiped out. Your purchasing power will collapse. $1 million in the bank might buy what $10,000 buys today. Meanwhile, people who own gold, real estate, businesses, commodities, they'll see the nominal value of their assets soar. They'll become much wealthier in dollar terms. This is the wealth transfer from savers to asset owners, from the middle class to the rich. And there will be a second phase. After the hyperinflation, there will be a currency reset. The government will introduce a new dollar, maybe a digital dollar, at some exchange rate to the old dollar. Let's say 10 old dollars equal one new dollar. If you held cash, you just lost 90% of your wealth. But if you held assets, you now own those same assets, just priced in the new currency. This is how governments have always dealt with unpayable debts. They inflate them away, then reset the currency. It happened after the Revolutionary War, after the Civil War, in dozens of countries in the 20th century. It's going to happen here. The only question is when. This is why I'm so passionate about financial education. Because if you understand what's coming, you can protect yourself. You can even profit from it. But if you don't understand, if you just keep doing what you were taught by poor dad, you're going to lose everything. The course of history has changed. The era of dollar dominance is ending. The era of middle-class prosperity based on steady jobs and savings is ending. The era of trusting the government and the financial system is ending. We're entering a new era where only those with real assets and financial intelligence will thrive. This isn't doom and gloom. This is reality. And reality doesn't care about your feelings or your comfort level. You can either accept it and adapt, or you can ignore it and suffer the consequences. The choice is yours. What I want you to understand is that you still have time. The collapse hasn't happened yet. The dollar is still the reserve currency. You can still buy gold and silver at reasonable prices. You can still acquire rental properties. You can still start a business. The window is open, but it won't stay open forever. My message is simple. Wake up. Get financially educated. Stop trusting the system that's designed to keep you poor. Stop listening to poor dad advice about saving money and staying safe. Start thinking like the rich. Acquire assets. Use debt strategically. Minimize taxes. Build multiple streams of income. Protect your wealth with gold and silver. Take control of your financial future before it's too late. The greatest transfer of wealth in history is coming. Make sure you're on the winning side.